Welcome to the MUFG Global Markets FX Week Ahead podcast with Derek Halpenny, Head of Research, Global Markets EMEA and International Securities. It's Monday, 23rd August 2021, and in our preview of the week, we're discussing the major themes for the FX financial markets. The following podcast is intended for professional investors and eligible counterparties only, and not for retail clients. Any content should not be regarded as an offer to conduct investment business or an investment recommendation, but for information purposes only. Good morning, Derek. And what are the key themes at the start of this week?
Good morning, Una. First of all, just to kind of quickly go back to last week, we had a big move for the dollar in a lot of G10 currencies. That started to reverse at the end of last week. And we had some dollar weakness into the close, and that's extended at the start of this week with some improvement in risk sentiment. So I think first and foremost, the focus is on whether this sentiment can be sustained, and the catalyst for that being Fed communications and the comments from Dallas Fed President Kaplan on Friday was the catalyst for the turnaround and for some renewed dollar weakness. So he's the first Fed official really to come out and suggest that the upturn in the Delta variant of COVID in the US could have implications on the timing of tapering. And therefore, it's quite significant. Kaplan also being on the hawkish side and being one who was quite public and vocal in expressing a view for tapering to begin sooner rather than later. So his acknowledgement on Friday that, if Delta was to get worse and start to have further impact on economic data, and that could have implications. So with Kaplan being on the hawkish side, and with Powell speaking on Friday at Jackson Hole, you could imagine if Kaplan was willing to mention the risks, we can certainly assume that Powell will definitely do that on Friday. So there may be some greater emphasis on these renewed recent risks in relation to the pickup in COVID. And that, I think, I don't think it's going to change the fact that tapering is going to begin later this year, but the FOMC minutes that came out last week kind of prompted this speculation of a sooner start to tapering, and secondly, a faster pace of tapering to get tapering completed sooner in 2022, which potentially then brings forward the timing of the first rate increase. So there's a greater chance potentially now after Kaplan on Friday that the comments from Powell on Friday will at least take that risk out of the markets, and the markets and investors then can ease off on the idea of a sooner and more aggressive taper program. And that, I think, should help to certainly bring back some two-way flow into FX after that strong gain for the dollar last week. Technically, DXY broke the high of the year at the end of March, so we had new year-to-date highs on Thursday and Friday. Now we've, as I said, retraced quite quickly from those highs, but technically that break last week is kind of supportive for the dollar. Now, really, the crux of the near-term direction, obviously, is Powell's speech on Friday, and that's really going to be the focus for the market. So while we have this kind of weaker dollar at the start of the week, I'm not convinced it's going to extend too much further until we get the Powell speech at the end of the week out of the way. And then depending on the comments made, obviously, by Powell, that will, I think, shape then the kind of mood and sentiment for the markets and the short-term course for the dollar into September. But if, as I said, if Powell is more balanced and we move away from the idea of a more aggressive taper program, then as I said, then the dollar strength that we've had of late certainly won't extend further and possibly could start to reverse somewhat. So yeah, it's all down to what happens on Friday.
And what else should we be looking out for this week, Derek?
Well, following on from that, the acknowledgement from Kaplan that Delta could have some impact on the course of monetary policy over the short term. It's really much more now about the economic data and the more timely data that might give us the first indications of whether or not the upturn for the Delta variant is having an impact on economic activity. So this week we're pretty light on top tier data. It's really going to be next week when we get the likes of the ISM and the payrolls report. For this week we have the PMIs today. We've had them from Europe and the UK, which I'll touch on in a minute. But we've got the PMIs in the US then later this afternoon. PMIs in the US don't really get as much attention, obviously, as the ISM reports, but possibly today, given Kaplan's comments on Friday, any evidence of a worsening of sentiment could see some bigger reaction for the markets this week. We've got the IFO from Germany later in the week, and then obviously Powell, as I said, on Friday. But here in Europe, as we had suggested in our FX Weekly, there's certainly evidence in the PMI figures today that Europe is a little bit more resilient, and COVID is having perhaps a bigger impact in the UK. The kind of infamous pingdemic, where people were being messaged on their mobile phones to self-isolate, that had a big impact on curtailing activity, even though the formal directives from the government in terms of COVID, those rules were relaxed. In reality, there was a lot of self-isolation, forced self-isolation, and the services PMI, advanced PMI today was much weaker than expected. Whereas in Europe, they've held up better, and that's consistent with the Apple mobility data, which on our measure, Eurozone mobility is now considerably higher than in the US and the UK, and that suggests that the Delta variant in Europe is having less impact. So that again, after Eurodollar has dropped now by 5 big figures from June through until through to last week. So, that's a fairly big move. And if the dollar is to extend further, we would expect the euro to hold up better than other G10 currencies in the context of further risk aversion and concerns about global growth. Because continental Europe does look to be in a relatively better position than elsewhere. On top of that, then, of course, we've also started to see the flow of funds from the EU Recovery Fund. Italy got its first portion of money in August, and in early August, a number of other countries, Belgium, Luxembourg, and Portugal, I think. So, that money's now hitting these economies. That's not going to have impact on the hard data, but in terms of the sentiment data, in terms of corporate sentiment, I think it can start to have a positive impact. And that all combined, along with what looks like investors coming in quite quickly to buy the dips in the Euro Stock 600, the macro backdrop in Europe still looks quite favourable. And in that sense, we're expecting the euro to hold up better than other G10 currencies. And if the dollar is now turning and about to turn weaker on the back of Kaplan's comments and possibly a more balanced, dovish speech by Powell, then the euro has some scope to recover and to potentially outperform. And equity flows, although a little bit dated, the ECB released the balance of payments data last week. Equity inflows from foreign investors we saw another strong month in June. On a 6-month basis, the flows are at levels we haven't seen since 2017, 2018. 2017, when we had the strong macro backdrop in Europe. At these kind of inflow levels into equity markets, the euro tends to hold up well. So it's further reason to kind of believe that the downside, certainly for euro in the context of a stronger dollar, is more limited at these levels.
And finally then, Derek, trade ideas. What's your research desk highlighting this week?
Well, last week I mentioned we had a long dollar-yen view. We had a short Australian-New Zealand dollar view, and then also a short euro versus sterling view. In the context of the risk of price action that we had last week, the pound clearly underperformed the euro, so we decided to cut the short euro long sterling trade idea at a loss. We've held the other two positions. Now, the New Zealand dollar long position, obviously we wondered about that given the upturn in COVID in New Zealand. But our logic of keeping that view versus the Australian dollar was simply, obviously Australia also was grappling with an upturn in COVID. And from a monetary policy perspective, we also had comments from RBNZ Governor Orr, who stated that the actions going forward is still likely to be to tighten policy in New Zealand, even if COVID was to exist going forward. Whereas the RBA in its minutes that were released last week were suggesting that they could act to ease policy again if COVID was to escalate. So I just think even though COVID has become a situation for New Zealand relative to Australia, we still think the risks are to the downside for Aussie Kiwi, so we kept that view. And then dollar yen, just the broader favourable dollar view. We felt if risk comes back and the dollar was to weaken against other currencies, dollar yen would be the one currency that could hold in if risk appetite picks up. So we decided to keep the long dollar yen view as well. So still hold two trading views basically.
All right, thanks very much for your insight, Derek. Have a great week and we'll speak to you soon.
Thank you, Una, and you.
Thank you for listening to this MUFG Global Markets podcast. Rate, review and subscribe, and contact your MUFG sales rep for more information. Come back next week for more insights from the Global Markets Research Team.